Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi and welcome back to the Conscious Day Trader. I'm Yanis and today we're going to break another pound USD dollar trade. ICT Concept 2022 Mentorship. Free on YouTube. You can go and learn it and you can follow what I'm doing. I post these videos every day, so make sure you go and like and subscribe to this channel. I'm now doing more and more and more. Right, it was quite a tricky day. I changed my bias. I was long when I looked at the charts on the pound USD this morning, but just before the open or just after the open, we're going to see exactly when, I killed the trades and my bias was short. Now, my long bias would have worked. I would have to manage it in a bit of heat and we're going to go into this. But the better option or the better analysis, and I was quick to realize that it would have been a better position to be in the short side because of the news that we had on the dollar and the bias that we were looking at on the daily. So what we're going to do, we're going to start with the results. So let's go on to this view. And as you can see, we had a great day, $524. I've turned on the trade so you can see this, even though we're going to do the analysis on TradingView. As you can see here, this was my long position, my original position. This is my second long position. And as the price came in, I killed that trade. Then it came all the way back up into a bit of drawdown there, and I killed this position here, and that's when I changed my bias. And if we go zoom in a little bit, you'll see that I'm not very good on MT5, as you can see. We went short here, short here, short here, and managed the positions all the way to getting these short positions here as my main trades. And these are the ones that paid these 18 pips, 17 pips and 17 pips to pay me for the day. Obviously, if I could hold, that would have been another super nice trade, but I'm really happy with $500 is over my sort of target for the day. And let's go into the analysis. That's why you're here, to see how I managed this trade, what was my bias, how I managed to correct my wrong bias. And as you can see, that long position would have paid me if I was long. That is, let's see, that is 34 pips, way over what I'm looking for in a trade. And this move that actually paid me down to this, it was 20 pips. So both ways would have worked. The key though is I would need to manage it. I need to manage these trades. And as you can see, from the London Open, we were long around these areas. And when I realized that these highs are not breaking intermediate highs and going higher, and also if we go on to the index, the dollar index, we saw the dollar coming down and filling those fair value gaps, which would mean and not breaking the previous daily high to the short side, that the dollar is still strong. And that gave me all the indications for me to change my bias. Should you change your bias? Some people will say no, stick to your bias, because eventually it will pay you and you can manage out. And that would have been true with the pound dollar. And we're going to look in detail of this. Might be a bit of a long video today, so to grab your coffee, a lot of learning. We're going to take everything off and I'll tell you exactly what I did just to give you a chance to see it as it happened. It's now 11 o'clock, so it's just after the close of the London kill zone. And if you've been following me, you can see how you can get these opportunities to trade, especially the pound dollar, which I trade every day. You can find opportunities in every single session. And yes, it's a bit volatile. Yes, we're on the 1 minute, but the reward is that you're done for the day when you're finished at 11 o'clock. In today's case, if you had to manage in this trade, maximum 12 o'clock at lunchtime, and then that's when you're reviewing, is this trade what you are looking for the London session, or do you need to prepare for the New York session? So we're going to do all that, but let's start. I do want to keep some of the buy side liquidity in, and I do want to keep, actually what we're going to do is we're going to keep the lines in just in case I miss something. But what we're going to do is take the replay, and we're now on the 1 minute. So we're going to go at the 6th and 6 o'clock. This is the information we had. Okay, this is the pound dollar, and we're going to do the same on the dollar. Actually, you can only have one replay, so we're going to go back to start with the dollar index. Right, so we had an FP event. We had good news in terms of there was more jobs releasing. There's an increase in pay, even though the jobs opportunities, even though we are technically in high interest rate area, so it shouldn't be the results that we're getting. So that was a strong indication on the dollar, not expected. And there were some good reactions if we were looking at the Bloomberg news. There were some interesting faces when the announcement came out. But what did we see here? Straight away, we're going to go onto the daily. And we, as always, we put the previous daily high, the previous daily low, and the equilibrium. So what area is the price now in? It's an extreme premium price. But how much weight does that weigh, since we're coming from NFP Friday, and Monday is normally a repositioning or the aftermath, if you want, from what happened on the NFP event. So yes, we're in a premium price, and this price will eventually retrace to bring it back to fair value and equilibrium. But at this moment, the dollar is really, really strong. So buying the pound dollar, even though it would have worked, it was just, you would be going against what is the big mover from Friday. So you want to see that settling down in the week before we understand if that's going to be coming back to these fair value gap on the daily, or is the index going to retrace back from the move that we had there. So like I said, I'm going to break down why I was long, and then we're gonna see how we looked at that retracement for the pound dollar. Now, for me to be long on the pound dollar means that the dollar is weak. And what did I see for the dollar becoming weak? We were in premium, we were decreasing, coming to that daily level, the previous daily high, coming back up and filling fair values. So the idea was that this price here would take out liquidity above this area here. If we want, we can put it in. So it would take this liquidity out like it did, buy side liquidity, and then come down to fill these fair value gaps. Now, if the dollar is weak, means that there's opportunity for pound dollar on the upside. And just as we're here, that happened to the pip. It's so good when that happens and your analysis works out. Look at that. Okay, not to the pip, but close enough. It filled all the fair value gaps and then pushed higher. So this would have been my opportunity. What time is this? 7:30 to have my long opportunity on the pound. Then it came up, failed to take the highs, came back down, smacked all the way to the top to take this buy side liquidity here. Okay, we'll just give you the whole story. And then it came back down, retested all the fair value gaps on the index. What time are we at? 9 o'clock. Time is extremely crucial with this. We're just going to do the whole session of the London kill zone so we can see. So we had that fair value, took out this buy side liquidity, came back, retested this fair value gap, and that would have been two opportunities to go long on the pound dollar. And now the price went up, retested this fair value gap, really nice. Again, look at that, to the pip, to the upper side, strong dollar pushing up, and now it's coming back, retesting this fair value gap. Don't take any trades off this, obviously. This is for educational purposes, and you should do all your own analysis when you're pressing the button. So what we're seeing here, we're seeing that refill of that fair value gap. that fill there, and that is the whole London session. So having that in mind, let's go now to our trading chart, which will be the pound dollar. And we're going to go back to that beginning of the session. We had a break of the, where did I get in? Let's see. Let's go back in 75 onto the top. And I was long on 120607. And this was the fair value gap that I got in. Now the fair value gap got filled and I was long. And then I got a second opportunity when it filled this fair value gap here. Really nice, because it failed to take the lows. However, when I had this setup and it came back up here, I didn't like seeing this break here. That was a strong break to the downside. Yes, it filled this fair value gap, but look how far it went down. These are indications that I look for strong pressure on the lower side. And what I did, I went onto the daily and I was like, okay, so I want to long the pound dollar. And like I showed you, we had that, we had the analysis from the dollar index. But I was looking at this, and if you look at the market structure, we've created these double top on here. And now the price is heavily pushing down with two red candles from the NFP. Has this move stopped? Is it finished? That is the question for today. Is it finished? So if we grab the Fibonacci level and drag it there, that is a 15-minute candle. We'll see that it's hovering on the 161. There's two options. The price can come back up to retest the tops or come down to the 2618. I was worried about this area going down and retracing because, as we said from the daily, we're looking at heavy conditions. We've taken out buy side liquidity from the left side, buy side liquidity here. We filled this fair value gap here, double tap twice, and now it's pushing down. And in terms of Fibonacci retracements, if you take this fib here, and we're going to change the retracement there, you can see that it's gone back to the 61.8 and now it's pushing to the 76.4 with not a lot of pressure onto the upside. So I was looking at this and saying, okay, we're at a discount level, and this price can go to equilibrium. However, I've got this pressure from the top, which is not looking great. And on the dollar index, we saw those fills on the fair value gaps. So there's a lot of confluence that wasn't. Sometimes when you trade and you see the chart so many times, you get this instinct. And it's not instinct from nowhere. It's data that you've seen. You've seen this before. It doesn't feel right. The highs weren't breaking and the price was resisting. So that's when I changed my bias and I was short. So as I wanted to get out of my trade, it gave me the opportunity, and that trade would have actually paid me for the $500 that I was looking for. I was happy I didn't get that trade because I corrected my bias, even though I was long. Then within an hour's in the session, realizing that that's not forming how I want it, and I changed my bias. And there is a key thing to say here: don't constantly change your bias. You have to base it on your analysis. You can't change it every swing high and every swing low. So that's what we saw in terms of the analysis on the daily. And then when I wanted to go short, I needed the price to come high. So I wanted my original bias to work out so I can get a better price to short it down to the previous daily low. So if we jump into, these are 15-minute candles, and I got a fill later in the day. So I managed to trade out of my positions with this trade here. I was long, came back down into a bit of drawdown, came back down. This wasn't too much drawdown for me. It was like 10 to 12 pips. I'm used to that. And I got out when the price was, I think, a $20 loss and a bit of profit on one. but I didn't care about that. I just wanted to change and get an opportunity to get low. Where would the opportunity arrive? And this is where buy side liquidity comes up. You can see we have the double touches here. We have this buy side liquidity forming about this area here. You got touch, 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 equal price here. So that's clearly buy side liquidity that got taken out here once, and now it's coming back to retest it. We did have this fair value gap on the left side here, and let's draw that in. And this is on the 1 minute, so 1 minute fair value gap. We did have buy side liquidity above these here and that swing high there. So I wanted to take this buy side liquidity, and in an ideal world take this buy side liquidity, but I didn't want to lose the move. And this is why I entered on this candle here. Now you will say, where is the structure? The only structure in terms of ICT that you would see that if you took this break, it came fill that fair value gap there, so you'll be entered in that to trade down. We had a break of sell side liquidity here. Let's add that sell side liquidity. So that sell side liquidity got taken out and the price came higher. If we drag it, sell side liquidity taken out, came higher, took out buy side liquidity on the top. And I remember one comment someone said, how do I know to short this buy side liquidity or to long this sell side liquidity? And that comes from your bias. Okay, so if I was sticking with my bias on the long side, this would have paid me really well. I would have taken 12 pips. And then if I was managing my trade down here, that would have been the 50 pips that we saw earlier. So opportunities both ways, but you have to be convinced from your analysis and to be sure of what you're doing makes sense to your trading and how you objectively analyze the trade. So we saw this come back, break the lows and fail to come back to the previous daily low and start pushing higher. So that's when I was convinced that this price is just coming to buy more liquidity on the upper side to almost like a Judas move, to take out a better position and then come down to the previous daily low. So as soon as I saw this move here and it filled that fair value gap, I entered the market and I was super happy with this entry. Now I had two things to do. If this price crashed down straight into my target, let's see, from this here all the way down to here would have been 24 pips. So 24 pips would have paid me about 15, so $300, $400. So I wanted to trade it to have a second position in. And that's where you will see, I can't remember how many trades I have. It looks like a lot of trades, but as I've always said, it's just 2 trades multiple times. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 positions. But these are repositioning. So you see 1, 2, 3, 4, 5, 6, 7 repositions and 3 trades that actually paid me. And you can see the repositioning here because it shows you where I entered and killed the trade. So I had shorts here that I killed it there. You see how I filled it there. That one came back up, killed it there. That one, I believe I killed it. I killed that one there, and that one there. Because I wanted to trade from this position here. This was my best fill. When it came back up into retest this area, I reanalyzed the chart and I saw that we're still in buy side liquidity and I added this position. Then it came back down and that was the final position. And the reason I had 3 is because I didn't expect the price to come down this low. I wanted to target this high here. No, swing low here. The reason, because you had this fair value gap on the left side here and there would be no reaction. You can see that reaction there when it touched that fair value gap, but the price is so heavy that it continued to crash it down. But I didn't want to swing for the fences and wait for the price to go all the way down here. I wanted to take my profits out, and I even take it before it took the previous lows, just because I saw that I'm in profit of half a grand in a day, and that was plenty for me and for my consistency into trading. So let's go back to TradingView, and as you can see that play out, it's come down all the way to this price here. This, because I only had one position, obviously I didn't kill the trade, I was in good profit, and then it came back up. I filled another position on this fair value gap, came back up, and my third position was on the top here. So now I wasn't happy with this position, so I wanted to take that position out. And when the price came down, I killed that position. That's why you see so many repositionings, because I only wanted to have, I wanted a clear confirmation. Now I would have this one. I have a better position here, so 2 trades. I don't want this one, so I killed it at this stage, and now I've got my 2 positions here. Price was filling fair value gaps on the top here, and then it came one more time to the upper side, and that's when I entered my final position, because I only wanted to target this area below here. My 2 positions would have been perfect to target the lows of the previous daily low for 32 pips twice, $600. But I wanted to kill that position. I was confident if the price comes above here to manage it out. Where it could have gone, it would have to go all the way to the top here to shift for that buy side liquidity, and then I would be able to do the same but in reverse. So I had my 3 main trades that then continued down and into target. And if we look at the current price, 40 pips on 3 positions, that's really, really good. 3 lots. So could I trail the stop? Yes, I probably would have taken less money, because if we look at the trail of the spot stop, that was my target, and that came down here. I would have probably put my stops there. Maybe I wouldn't have been taken out as it went down. That order block there, if it closed and then it wasn't, I would probably be taken out here. So roughly, it wouldn't have changed my profit so much. Yes, I could have held this, but if the market came back up, I would have only made 8 pips per trade, so not a lot of money. I wouldn't have been paid. And that is something that you get used to, or how you manage your trades. If you're wondering how I'm doing the stops, go and watch my previous video, because I go in a lot of detail on how I trade, how I manage my trade. It's the 431 profit trade video on the previous one. If you do have questions, make sure you drop them in the comment, and I try and answer them all. Someone also asked, I'm hoping you're still watching, because I'm going to give you some tips now on setting the fib. So as you can see here, he asked me about the settings of the fib. This is what when a fib retraces, it tries to retrace 50% of the move, and 61.8, which is your Fibonacci numbers, that is the area where I've highlighted, because that would be sort of your golden eye area, where the price will pull back and get it into that area. If we throw this fib on any sort of big move, you will see, let's take this one. You see how it touched the 50%, came back up, touched the 61%, and then went off. So that's why I've labeled these like this, and I've put the 23 because if it closes below the 23, there's higher chance that it will go to the 50, and that gives me sort of like a green color to go down. Scruffy loves to trade with these. He calls it the golden eye, I believe. If you check him out on YouTube, he breaks down how he uses this, and in detail strategy on how to use the fibs. Then you've got your Fibonacci extension, and I've only got the 100 and the 2 extensions. So let's add the Fibonacci extension on any move. So let's say a complete move. Let's go on to the hour, and then we have, let's take this move here. Fibonacci from that level to that level, And then you can see that the equilibrium, you would be targeting 61.8, which is there, and 216, which is currently at now. So these are 127 as well, I've added in there. But these are, then you could label that, and it would give you sort of like limits where the price can extend to. Someone also asked about the indicator on the FX. You go on to FX market sessions, and then if we go into it, and I want to save this as my default, you've got your London kill zone, which I use the 7 to 10. The New York session, which is a 1 to, actually was it Delta? I think the name that asked me this, to 10 o'clock PM. And obviously on the top here it says GMT. This is how many historical data you want to see of these sessions. And at the end here, you've got your Tokyo/Sydney, which is your Asian market. I haven't traded the kill zone. I can't remember. I would recommend going and checking out the ICT kill zone videos, and you can YouTube that. They're everywhere, and it will give you that, and you can just put it in there. If you are trading with the New York session, what you can then do is change this time to your New York, like that. And that will give you what time the London kill, from, for instance, is 2 a.m. in America. And I hope that makes sense. And we are currently, news-wise, we've got some news, not as big as last week. So we are hitting the week sort of running, and the biggest news will be from the NFP, and this week will be repositioning and profit taking, and also repositioning in terms of what the market's going to do this week. Make sure you like and subscribe this video, and I will see you tomorrow.
I can't take no loss.